So today I'm gonna show you guys how to set up your graphs, how to set up your sell side liquidity, buy side liquidity, your moving average exponential, your EMAs, and order block. So it can help you trading along the way. So we have a blank slate right now. We're an Apple. I'm pretty sure I could do QQQ. Yeah, I could do QQQ. So this QQQ and NASDAQ. Right now it's trading at 519. But let's set this graph up, make it look pretty. Uh, so first, let's start with moving averages. You could just search up EMA on this little icon on mobile or on your website. EMA moving averages exponential. You're gonna get one, but you gotta open three since we're running three moving averages. EMA. Yeah, I'm recording. All right. So we need three EMAs. Well, we need the other trading view, the subscription, which I already have in my other account. But let's say you have three, right? You have your 9 EMA. For now, we just put 9 and 21. You change your length to 21. Okay. Uh, so then you have your 9 and 21 EMA. Let's change color. This pretty, say like yellow. So then we have our 9 moving average, which is in purple, and your 21 moving average is in yellow. As you can see, I can use this as a confluence every time that the 21, which is uh, the yellow graph crosses and goes over the 9 moving average. We are in a bearish market, meaning you can see structure building up towards the sell, like a sell model, like towards it going down. So right here it crosses, as you can see right here, it crosses, meaning that we're in a bearish trend, and we can see it go down to, you see, as you can see, it goes down, it comes down, it goes down. So also it works the other way around. If the 9 moving average goes and crosses the yellow 21 moving average right here, you can see, let's see. It crosses right here. Uh, we expect it to be in a bullish market, meaning it's gonna go up. As you can see, it did go up. It's gonna be used as one of many confluences in order to let you know what market is gonna do and market structure. Helps you realize trends, especially on the higher time frames. As you can see, we're in the 1 day. We will be in the 4 hour, the 1 hour. Uh, Usually, this would help you across all time frames, but I should like to look at it in the higher time frames in order to see the trend, the current trend of the market, and how it's flowing. So that's one thing that we're gonna set up our charts in, the moving averages. There is the 200 moving average, which yes, once you have your moving average, you could on your inputs you just change the length to 200. But as of right now, the 200 would just be the 200. Let's see, let's change it to 200. The 200 only works as another confluence to rebuttal and look for a retracement or an inverse on. For example, right here, we can see that the market crossed the 200 EMA, right? We're looking for any type of retracement for a previous hit on the 200 EMA and bounce off, or go through it and inverse it and look for a retracement back and bounce off. So as we can see right here, um, it went up. Actually, not here. Uh, as we can see right here, it crossed the 200 EMA, then the market, we're looking after it crossed, we're looking for a retracement back. Uh, right here, we could have retraced, but it never actually bounced out the 200 EMA. Um, but right here on market open, it did on the, think this is market open. This is another day. These gaps, um, they kind of they tell you like, oh, it's like day one, day two. Like right here is Tuesday, and right here is Wednesday. These are overnight hours, London hours, and Asia hours. That are not really graphed. Um, on the hourly or the day on the day chart. Um, so as you can see, as market close and market open overnight, it moved down, trying to hit those the other confluences. But as you can see, we hit the 200 EMA, looking for a retracement back and bounce out the EMA. As you can see right here, we bounced out the EMA, meaning that like that's what the EMA is for, looking for as a retracement. Think of it as a wall. Uh, I like to think of it like that with any other confluence too. If there's a wall right here, and this is like we're right here, we cross, we're over here, like just consolidating, and it comes down. I'm looking for the bounce back up. Uh, it's like you're bouncing a ball against the wall, right? So we're looking for it to bounce back, retrace and bounce back. And if not, break the structure, look for retracement, look for that retracement up for it to later like lock in an entry and for it to go further down. Um, but that is another confluence, your 200 EMA, which you would be able to see along with your 21. But as of right now, I have the free version since I want a clean slate. So yeah, that would be one confluence for your chart. Another would be oh yeah, order block. You can see order block. You would go to indicators again. Let's see if it lets me. This is gonna be market. You have to search up market structure by order block right here by EMRE KB. Um, but I guess it's not letting me. Maybe if I take these out, I could add on that so you could just see. Yeah, there you go. So this is another helpful tool. Whenever you're trading, for example, let's go retrace back here. Oh, I can't do that either. All right. Well, let's just say we retrace, right? This would help a lot when you're on the go and you're on mobile and or you're just busy, this helps a lot because it's an indicator and it indicates market structure and order block. So meaning it analyzes the order block and it runs through basically does all the work for you and it lets you know when we're in a bullish market or a bearish market, and it also lets you know for like a good entry. For example, right here, it was indicated that this was a great buy opportunity for it to go bullish. So we could go on calls here, meaning that's gonna go up. See, maybe right here it consolidated back down, and this would fill up green, meaning we're on the go for it to go up. And look, we had all this. Oh, we have all of this. We have all this fluctuation towards the upside. Uh, it also does the other way around too. So like right here, it said we was gonna go great bullish run. We went up for the bullish run, and we're still bullish. It could be the other way around. Let's find a bearish indicator. Maybe on the 1 hour, we're not gonna find anything soon for the bearish. It also marks your change in structure, your CISD. As you can see, there's a CISD. Look for retracement for the back. Make another video on CISD explaining what it is. But you see CISD, look for retracement or right here. I mean, I could possibly like even indicate um the other confluences along the way, ICT confluences, like right here, You see broke structure, came back up. You have a fair value gap, came back down and just came all the way down here. That's a A plus entry, A plus trade. Um, Looking for stuff like that all the time. Um, but that's how you would set up your market structure break by block, by order block. Uh, there's another. You could change the style, your visibility, in hours and minutes. And I'll show you how to do it so you could just screenshot it from mine. But you would come here and go on visibility, edit the numbers as I have them in my chart and my inputs too. So you could just screenshot and yeah, you're gonna have two of these. Um, that's another thing that I would put in my charts. And now I'm gonna teach you guys how to identify your sell side limit and your buy side. Usually do this on a higher time frame, 4 hour, 1 hour. I like to do it in 1 hour. We could see get some trend lines here. That's a lower high. Because as you can see right here, if we make a trend line going on the upside, uh, you see how it goes higher high, lower low, lower high, I mean, higher high, lower high, and then higher low, I mean higher low, and then higher high, higher low, higher high. So basically, what it's doing is going up and then creating a higher low, and then it's like a zigzag pattern like that, and so on and so forth, right? So it keeps going up, and there you go. So your sell side liquidity would be, oh shit again. My bad. Your sell side liquidity would be these lower low, these lower highs. So this would be your sell side liquidity. Let's set the text. Let me make your sell side liquidity, and it would be your sell side liquidity. Yeah, SSL. Yeah. So we use sell side liquidity to target previous lows when we are retracing back and are bearish, and you're just seeing that confluences are aiming. Let's say your EMA cross, order block tells you it's gonna go bear. Uh, you have a inverse fair value gap that just retraced, and you just know it's gonna go down. You use sell side liquidity in order to target your previous lows. Like right here, this is a previous low sell side liquidity. Uh, there's another sell side right here. There's sell side right here. Sell side. Uh, and I would like for sell side, I would let it go across, like make it long so you could just see where it's gonna hit like previous lows. Um, there's another sell side right here. Think of it as a layer cake and think of the market like I don't know, like a rat eating through layers and like levels, like you have to go through the levels and you can see retracement after every level of sell side that is getting taken. So right here, it's another sell side right here. So right here, as you can see, we built a lot of sell side for QQQ during what is this? Friday. We're in this Friday last week. So we're looking for a retracement, but since we build a lot of sell side, I would love to see a bear day run to try and take these sell side liquidities and lock in puts like the following week of the May 25th. Um, is it May 25th? No, May 15th. I'm sorry, May 15th. Um, I don't know how the market went, but this building a lot of sell side liquidity. We'll love to see a retracement take these lower lows. and that's how you use it. You would use it, let's say you have a trade. Let's just say you see an A plus trade, your EMA is crossed. See there's a fair value gap right here, EMA is crossed. Fair value gap came back down, crossed it, turned into inverse. Um, then you see a retracement and an entry, right? So, but the thing is that you know it's gonna go down, right? Order block tells you it's gonna go down. You have your EMA cross 9 and 21. You have inverse fair value gap retracement and filled in wick inside here or candle inside of here. Um, then you're like, okay, if you don't have your sell side liquidity marked down, you wouldn't know where to target. So a good target would be right here. This would be a good target for sell side liquidity. You could use this one too, but if you want to maximize profits, I feel like right here would be a very good indicator or like set for your exit. The reason why is this right here, this block, this consolidation. There's a lot of it consolidated around this price around 478 and 483. Just went up and down. That's a lot of consolidation, meaning that it's for surely gonna take these highs. You could say your stop right here, but realistically, I will set my stop at like 480 with 50 cents ish right here to maximize. And then you can see for an up trace, and then if you keep going bearish, then bounce off this, sell side liquidity coming back down. Um, what else? Uh, so in order for me to how this would be helpful also would be if you have your retracement and then you're like, okay, I'm ready for an entry on a short, then you would take your profit right here at this outside liquidity and send your stop loss either at the higher high or at the end of this fair value gap at the top of the wick right here. So this would be your trade and you would lock that in. Um, and that's how you use sell side liquidity. Uh, and that's an A plus trade too. Um, what else? I actually like to keep these values. Let's go on the 4 hour. I actually like to keep these values going across my whole chart. So I actually like take them across like this and take them across like this. Uh, take these across. But I actually build them from the left towards the right, not from the right towards the left. So let's just delete that. And right here. Oh, shit. Oh, it's gonna be a long video. Holy shit. Let's go back to our 1 hour. Uh, let's scale this down more. So right here, uh, this is a good example of turtle soup. I'll explain that in another video, but right here, we're going down, right? So let's say right here. Now I'm explaining buy side liquidity, which is the opposite of sell side liquidity, but it's the same thing. So I shouldn't really take that much long for you to understand this. Sell side liquidity, well, buy side liquidity, sorry, BS, BSL. Actually, you just do BS, but it says BSL, buy side liquidity. Uh, Meaning lower highs, lower highs, lower highs, lower highs, lower highs. So buy side liquidity right here, building a lot of bills, buy side liquidity right here, another buy side liquidity, perfect buy side liquidity actually. Because as you can see, the current price is at the previous buy side liquidity, and this is what I mean. When you look at you kind of bring your trend line buy side liquidity across to the current time, which is right here. Is the current time. Uh, It's our buy side liquidity right here. Buy side liquidity. Where else? This could be buy side liquidity too, but I wouldn't really mark that down since we don't have like an average. As you can see, consolidates, consolidates. Right here, it doesn't consolidate. Right here, it consolidates. Right here, it consolidates too. Another perfect buy side liquidity. Um, as you can see, you could just go on your chart, go on the 1 hour, 4 hour, but usually the 1 hour, and just mark down your buy side liquidities, your sell side liquidities. That's a buy side. So as you can see, when we was like focused on this only right here, we see that, oh, the market is is gonna go bearish, right? Because we build a lot of sell side liquidity. We had to see the bigger picture of the things and the market. And if you see this and just zoom out, we see we have a lot of buy side that we've been covering for the past month or so, since April 25th. And we've just been like hitting those buy sides. You see, we took this buy side right here, this buy side level, another taken buy side level. We just took this buy side level from back in February, and the next target on the because we're still on a bullish market run. The next stop is 537, which was another buy side level created in the 19th, right? So like the market is still bullish. It's still gonna go up, and we're looking to see targets up here at 539 anytime next week probably. We're gonna see retracement due to the all the buy side generated, and I'll explain it more like during live trading, but um or in my daily bias. But usually when this happens and all our sell sides created, we have 1 day of retracement back to the to sell side liquidity right here, right here, right here, and then we see a shot up to finally take this level of buy side. But I would leave it like that, and it's gonna look crazy, to be honest. Like your graph is gonna be all over the place, but it's good, and it's good for you to mark down these levels just for you to use as indicators. So I'm marking down sell side liquidity. It's kind of looking late, I ain't gonna lie. Sell side liquidity and sell side liquidity. And there's sell side liquidity here. So at least you know how to mark these down. So buy side liquidity, you're marking from the top. Sell side liquidity, you're marking from the bottom. Yeah. So then your graph's gonna look like this. Let's just put the indicators. I just do the EMAs, moving averages, and then change it. Put 21. Your style is gonna be yellow or any color you want. To be honest, you see. Now we have this, and now you have more confluences, yeah. Uh, to see how market's moving. Right here, again, moving averages crossed, looking for sell side, buy side. You could even continue, marking buy side. There's another buy side right here, which turned into a sell side, as you can see. So, matter of fact, when that happens, you could just this is why it's important to market all the way across. So then this buy side turned into a sell side, uh which is kind of interesting, because it took it over, retraced, and then shot back up. Um and just, marking them down. So we see moving average crossed. We're in a bullish market, looking to target buy side liquidity right here. You're still in a bullish market, so we keep targeting buy side liquidity. So your graph looks like this now, right? Um, and that's about it for the way you set up your graphs. So that's the way you should set up your graphs. And let me show you my graph with everything on it. See sign in. Let me log in. All right, let's go. So my chart would look like this, right? I'm not showing my order block right now, but if I were to show my order block, this is how it would look. Um, Helps a lot to see like where market's going and how it's building up. So right here, Thursday, uh, as you can see, it's the same graph we was just looking at. But the thing is that it just showed us up to here, I think, right? It just showed us up to here, and I told you we built a lot of sell side liquidity, and look what happened. Took it out. So my bias was right, I guess, on the other graph, because we was limited to the free graph chart. It's like delayed for like a day or some shit like that. But excuse me, my language, but yeah, we built a lot of sell side liquidity. We took them down. Uh, we saw uh, a retracement. We might see a continuation towards the to hit these sell side liquidities and look for an equal low in order for it to come back and retrace up to what was the level I said, like 530 some. So and that's in the 1 minute. So let's see the 1 hour. Yeah, it kind of looks like that. So we're trying to target these 540 areas, but you see how like I marked all of them in white, and there's a lot of things going on here from when I continue trading, so and that's going to continue happening over here. But if you could see on this, it's a mess, but um, I marked out everything when it comes down to the minute. Let's see, let's see where we at. I lost my graph. Here it is. So what was it at? Right here, there's a big mess right here. You're gonna see it's not a big mess when you're in the 1 minute and you scale out. So then you have this, right? You're marking sell side liquidities, marking buy side liquidities, marking fair value gaps. I don't know why I did this for. Uh, I don't really use that anymore. Mm, Lies. But yeah, that's about it. Literally, that's all you need for your charting. You could label it a resistance. You could like every level you see a resistant level. But yeah, you could like right here, sell liquidity, right here, sell liquidity, sell liquidity, and we came took those. What else? Yeah, this guy falls all over the place. But yeah, I think that's about it for the video today. Um, Hopefully you get how to chart and also I almost forgot. So you could see and copy, take a screenshot, copy this. Remember, um, copy this too. Remember you put two of them, so you click twice on click twice on the indicator and copy the number to the decimal point and take a screenshot if you need. And remember it's called market order, market structure. This one right here. Yeah, I could put a third one, but and yeah, get more plan. Right now I have the basic $19 plan, but this is how you would do it. And you see right here, you have a bear indicator, and look, came back, took all of this bullish indicator, meaning that we might go up even towards tomorrow. But yeah, that's about it for today. I'm gonna make a video about fair value gaps, inverse fair value gaps, SMTs, turtle soups. Um, what else? What else is there? Uh, MMX. What else? And I think that's literally about it. That's all you need for training, to be honest. If there's anything else, I'm gonna drop a video for it anyways. Also, I'm gonna start. I think I'm gonna start showing my journals so you could know how to journal properly your trades, and that's gonna help you grow in your trading journey like exponentially. Like personally, it like really helped me to just get the hang of what I did right and what I did wrong and just build as a person, because this trading thing is just our psychology, and you need like to know what you're doing right and wrong, reflect and not feel bad about it. If you have a bad like -$500 day, and not let it, just let it go and just like look at the positive side that in this market like you're gonna lose bad, but you shouldn't give up, because you, you know, and you need to trust yourself and know that, oh, I'm gonna make it back, not today, but I'm gonna eventually make it back, because I trust in my own confluences. I trust in the way I'm trading, but it's gonna take a little while. So I say if you are really trying to improve, look at other people trading. You could paper trade. I didn't paper trade, but you could paper trade, and you could uh just expose yourself to as much trading as you can on your free time. And obviously journaling helps a lot. It just, it's a catalyst for your, for you to just, you know, exponentially just learn the market quicker, and also just absorb like all the information. But yeah, it's 10:40, and I'm gonna just, I don't know, I'm gonna just see the bias, analyze bias for tomorrow. But yeah, this is the first video, and hopefully there's many to come.